at 12:30 p.m. only on Bloomberg Quint.
Welcome back to watching Indian Open on Bloomberg Quint. Let's see how the Asian markets are panning out at this point of time. Most of the Asian markets are trading with losses. The Nikkei is down close to almost 0.8%. The Hong Kong markets are down almost 0.5%. Let's pull up and see how the SGX Nifty is panning out in trade. Has recovered from the lows of the day. At one point of time was down 60 points. Now about the 10,700 mark in trade. But what are the F&O cues indicating? Over the past few days, we've seen that call writers have become extremely aggressive in the market. Is there more scope for the market to fall down, or are we seeing support levels soon?
That is true, Darshan, that we have started to see more and more call writing over the past few days. And, yesterday wasn't any different. We did see the indices come off to a certain extent, but there was very little change in the open interest for the Nifty futures. The Nifty bank futures, on the other hand, has seen some unwinding coming through, even as the index moves down by around 0.2%, another 8% shed in open interest. So this could be a concerning sign. But when it comes to changes in open interest, again, we're starting to see more writing in the 10,800 call and unwinding coming through as well for the 10,800 and 700 puts, considering we saw the indices come off to a certain extent. Let's also take a look at how we are seeing the put call ratio pan out, currently at around 1.48. That hasn't changed substantially, but it is likely to change should we see more weakness there. Now, we do have CG Power, which enters the F&O band, and on the other hand, Jet Airways has moved out of the F&O band, so we'll be watching out for these stocks. Three other stocks I'm keeping an eye on today's day of trade. IndianOpen, that's seen short covering even as the stock moves up, but SRF is the one stock which has seen more weakness come through. In fact, open interest surging by as much as 19%. And finally, we're taking a look at NIT Technologies, which has been very strong off late, but considering we saw a drop in its underlying yesterday, there was some longs unwinding coming through in yesterday's day of trade for NIT Technologies. So a whole host of stocks that we are going to be watching out for, and of course the benchmark index as we move into trade today.
Well, thanks a lot for that, Agam. Well, let's put all of this into perspective. Avinash Gorakhshekar, Head of Research at Joinder Capital Services, joins us right now on the show. Avinash, good morning. Thanks for joining in. OMCs, what are you betting on here? Yesterday, with this, up and down in crude prices, there was a bump up that we saw in the oil marketing companies. Today, crude has started off higher. Maybe it'll start off lower. But net, if the OPEC turns out to be a non-event, what's the investment case in OMCs?
I think if the OPEC turns out to be a non-event, then in the near term you could see a bounce in most of the oil marketing companies. I think the concern in the markets are clearly that if the supply side equation from OPEC does not come as per the street expectations, the markets were expecting a supply of around 1.5 million barrels per day, and I think anything less than that could possibly be a negative surprise from the market's point of view. And that could possibly be a little disappointing for oil marketing companies, especially airline companies, because if crude prices do move up, that could mean definitely for the OMCs, the GRMs may come under significant pressure. My sense is, I think, there could be a balance between what OPEC wants to do and what the consuming countries want. So clearly, chances are 50-50 that we could see a supply side, number close to about 1 million barrels. And that possibly is something the markets could easily digest. And probably you could see a little bit of bounce on the OMCs. But going forward, how crude prices firm up going forward from here would be very crucial, because we are unlikely to see levels below, say, $70 a barrel, at least in the near term.
Okay. Yeah. Okay. Avinash, stay on. We would want your thoughts on some of these companies as well, the liquor companies, and Som Distilleries in particular, going to move up the value chain. Its subsidiary Woodpecker Distilleries has got permission to start producing Indian-made foreign liquor. Joining us right now on the phone line is Mr. J.K. Arora, the Group Chairman and MD at Som. Mr. Arora, good morning and thanks for taking our call.
Good morning.
How does this alter your, beer stroke IMFL contributions over the next 12 to 18 odd months, and when do you start manufacturing in full steam at this facility?
You see, this is going to add substantial turnover in the company, and next month, July, we are going to start this. The facility was ready. Only thing is, because of election, it was delayed. But now its permissions are in place, so we are going to add the sales turnover from next month onwards.
Aurora, which are the products that will be manufactured or the brands that will be manufactured at this new facility?
The same brands which we are making in the parent unit, Som Distilleries and Breweries, the same brands are going to be there. There are no different brands. Only thing is since this will be now start manufacturing in the Karnataka itself, so the profitability level will go up because of the whatever amount was wasted in the freight, taxes, interstate taxes, duty, etc. This will be saved, and some substantial profit will come in the company.
Okay, since this is a new plant, right, sir?
Yeah, this is a new plant.
So how much in how much time do you expect to break even for all the capex that you've done for this plant?
Actually, we had originally planned for 2.5 years. But the way that things are shaping up, I think we will be able to do much early.
Like how much early?
Instead of 2.5, I think it will happen in 1.5 years.
Okay, and what does the capacity go up to? Because pre this plant, what was the existing capacity of your other plants combined? And getting this plant on stream, what does the capacity of your entire manufacturing go up to?
You see, for beer, we have the 6 lakh hectoliter in Bhopal plant, which has been added about 3.5 lakh cases in the Karnataka, and for IMFL, there is about 3 lakh hectoliters, which was, and this plant is going to add about 2 lakh hectoliters in the.
Mr. Rao, one final question from my end. You had guided to about a 50% growth in FY19 over FY18. Was that taking into account the enhanced production as a result of this plant coming on stream?
Yeah, of course.
Okay.
This is all well planned.
What I'm trying to get at is that this plant getting commissioned will not add to that 50% growth number, I would presume.
No, this is, this only will facilitate that. Yeah.
Got it. Okay. Good having you, Mr. Arora. All the best for the new plant as well. Thanks for taking the time out.
Thank you very much. Thank you.
So pieces falling in place for Som Distilleries, essentially. That's the key word that is coming out of here. Avinash, do you track this one or some of the others like Radico Khaitan or some of the smaller ones?
No, I think Radico Khaitan definitely we track, and
I would track this one.
No, we don't track this one, but at least from the face of it, it seems that some sort of cost savings are going to accrue, and that obviously could get factored into the EBITDA margins for Som Distilleries. But coming to the choices, we like Neeraj, we like Radico Khaitan. The stock has underperformed, but if you see the Q4 number, the volume as well as the value push for most of the company's products have been very strong, and we believe that most of the highway ban issue, typically the DMON and the GST issue has now been neutralized, and we could possibly see higher volume growth coming in for the coming financial year. So I think Radico Khaitan looks pretty good in these kind of markets. This is a pure consumption theme, and clearly if you look at United Spirits, United Breweries, Radico Khaitan definitely looks attractive from a long-term point of view.
Okay, Radico Khaitan looks attractive at this point of time, but we have a research team ready. We have all the stocks that you need to watch out in today's trade. A lot of stocks that came out, and there's this big Goldman Sachs note on ICICI Bank, which they've removed them from the conviction list. What's the rationale? What do they have to say on that? We'll ask our team. So Nikki and Shraddha join me in the research huddle. Nikki, I'll start with you. Which are the important stocks that in news today?
Sure. First one, we're going to track Adani Ports and Special Economic Zone. This is back on the bull deal which took place yesterday, where the promoter entity sold in 2.7% stake, which includes Gautam Adani family and Pan Asia Trade and Investment. They have offloaded cumulatively a stake of around 2.7% in the counter. On the buying side, we have Euro Pacific and Capital Research, which have been the buyers of these stakes. Second in the list that we're tracking is Tata Steel. Now, Thyssen Group Work Council has cautioned against any kind of hasty deal towards Tata Steel. Keep an eye out on that development for this counter. JSW Steel, again a metal company making it to the counter, proposed an investment of around $500 million to upgrade a steel manufacturing facility in Ohio, US. Also, the company is may bid for ArcelorMittal Romanian plant. This is a Reuters development that we have. In terms of pharmaceutical that we are tracking this morning, AstraZeneca Pharma, which has received a marketing permission for one of the lung cancer drug in India. And next in the list we have Bank of Maharashtra, where the shareholders have given their nod to raise around 3,000 odd crore through FPO, QIP preferential share method. Also, we'd like to keep an eye out on Balaji Telefilms, which are expected to meet bunch of mutual fund like Franklin Templeton, you have Sundaram MF and others. Also, ET exclusive that we're tracking this morning, Nokia has signed a 5-year global IT infra and application service deal with HCL Technologies. The deal is expected to be in the worth of upwards of around $500 million.
Okay, so these are the stocks that we need to watch out for. One other stock which has been in focus of late has been ICICI Bank because of all the issues that are happening regarding the management rejig. But Shraddha, Goldman Sachs has come out with an interesting note. What are their findings?
So Darshan, what they've done is removed ICICI Bank from the conviction list. Why have they done that? Well, on account of this entire issue around the current CEO, the uncertainty around what the outcome of that independent inquiry will be, and also on account of lack of visibility around succession planning for a CEO. They've said that since they added ICICI Bank to their conviction list on June 2017, the shares have returned just about 1% versus Bank Nifty's return of about 13%. So those are some of the reasons why they've removed it from the conviction list. But despite that, they've continued to maintain a buy rating with a target price of 375. That's a good 26% upside. Why? Three reasons driving their bullishness. One is they believe that ICICI Bank has ahead of the curve bad loan cleanup, especially when compared to peer bank Axis Bank. They expect normalization of profitability by FY 2021. And third, they say that the retail liability franchise continues to remain extremely strong. Even in the bear case, they believe that there is a sufficient cushion. What will drive a positive view on the stock from here onwards? They've said that any faster cleanup of the residual book, expedited completion of inquiry, visibility on the appointment of the next MD and CEO, and sustained improvement in operating profitability, all of that will lead to them continuing with their bullish view.
Okay, so that's the view that's coming in on ICICI Bank. Avinash, the big development today will be probably the JLR investor meet in London for the investors there. Tata Motors of late has been pretty much range bound. Any view on what this could throw up for Tata Motors?
I think Darshan, clearly, most of the analysts would actually get to know the working from the JLR point of view in a minor detail, and clearly, most importantly, the kind of cost reduction program and strategy which the company has announced. I think one could possibly be able to read out what the management strategy is over the next, say, 12 to 18 months. Clearly, I think the markets are clearly awaiting as to when the company actually starts generating free cash, because even as of now, the number continues to be in the negative. My sense is, I think in terms of new product launches and in terms of the cost cutting, what kind of incremental savings at the EBITDA level the company could manage to save is something which most of the analyst community would like to know from this meet. Overall, I think the JLR piece is important, and how volume as well as product improvements take place and cost cutting happens is something which is going to drive the earnings for the next 2 years.
Okay, a related question, Avinash. One more auto ancillary related stock which is not performing. You've liked it. Is Bharat Forge yesterday or day before yesterday? I think hit 52-week lows as well. Is it entering better value zone, or is it entering into a zone wherein it makes you wonder if this is the right time?
No, actually, Neeraj, it was surprising because we've seen a consistent fall from around 650 odd levels to close to 600 levels yesterday. So I think clearly in terms of the headline numbers, specifically from the commercial vehicle and the Class 8 truck market which the company serves, I would not be surprised that we could see a bounce in the stock very soon. I think clearly it is appearing in value zone, and anything below 600 odd levels, one should definitely look at accumulating it from a portfolio point of view.
Interesting. Okay, stay on, Avinash. So much more to talk about. It's that time of the show wherein we shift focus towards the technicals. Let's start off with Samit Chavan. He's Chief Analyst for Technicals and Derivatives at Angel Broking. Joins us right now on the show. Samit, good morning. Many thanks for joining in. How are you approaching trade this morning? The world market seemed a very unhappy place, but Asia, in particular the SGX Nifty, is indicating that we may well have a flat start.
Good morning. See, since last couple of weeks or 3 weeks, index has done nothing. It has been just oscillating within a range of 10,700 on the lower side, has been acting as a very strong support. And at the same time, whenever you see Nifty attempting to break higher end, which is around 10,900, 920, this attempt immediately gets sold into. So we believe that if we have to take any aggressive bet on index, it has to first come out of its congestion zone. So at this juncture, we would avoid trading aggressively in index. But if we have to place any bets, then at lower end, we would be a buyer keeping small stop losses below the support levels, and at higher end, we would be sellers by keeping stop losses at higher levels. So we are now trading around its major support level, which is 10,700, 10,670. So unless we don't see any major breakdown on a closing basis, we are likely to trade with a positive bias, and individual stocks probably will give you better trading opportunities.
Okay, Samit, which are the stocks that you're recommending for today? What's on your list?
I have two calls. Both would be on the buy side. Z Entertainment is the one stock that we have been closely tracking since last couple of weeks. Yesterday, in the first half, we witnessed a good positive traction in this counter. The volume activity too picked up substantially, and in this course of action, the stock managed to surpass its recent hurdle of 570. But in the latter half, we witnessed some kind of profit booking, and the stock has come off a bit. But we believe that this would be a good risk-reward ratio that this stock is offering at current level. So one can go long with a small stop loss of 559.25, and we would expect a decent move if the stock manages to surpass 570 today. We could see a good move toward 586, 590. Apart from this, LIC housing is the one stock which has been underperforming since last 5 to 6 months. Recently, we witnessed a good base building process in this particular account, and yesterday there was a breakout on intraday basis. So we believe that the stock is poised for a decent move. One can go long with a stop loss of 486, and we expect a decent move towards 546.
Okay, two buy recommendations, Z Entertainment as well as LIC is what Samit has been speaking about. Shrikant Chauhan, Senior Vice President for Technical Research at Kotak Securities, also joins us on the show. Shrikant, good morning. Thanks for joining us. What's your view on the Nifty, the Bank Nifty?
Hello. Good morning. I think Nifty is very clearly in a range. It is not breaking the level of 10,700 on the downside decisively. At the same time, on the higher side, 10,830, 835 is going to act as a strong barrier for it, because again, in last few days, if you see the overall pattern of the market, then it is in the range, and because of that, the market is turning more and more volatile. So we are of the view that till the market is not breaking decisively the level of 10,690, we should look for taking some contra bets close to 10,700 levels of going long, and selling bets around 10,800 with a stop loss at 10,835. So today, because we are going to open somewhere close to 10,700, our strategy should be to look for adding some long positions close to 10,700. But if we see the market is like opening down below 10,690, then certainly in that case we can take a conditional call of going short in the market. And for Bank Nifty, yes. For Bank Nifty, 26,400 acted. Sorry, 26,400 acted as a very good support for it, and even the 20-day simple moving average is also close to those levels. So there also we are expecting range-bound activity, 26.4, 26.6, and about 26.7 we are expecting 27,000. So broadly, all PSU banks are down. Private banks are facing hurdle at higher levels. So there also we are expecting some range-bound activity.
Okay, what about specific stocks? Shrikant, if I'll come to you only first.
Yeah, Neeraj. For like stock-specific recommendation, we would like to initiate short positions on Union Bank. All PSU banks, they are again falling to their previous lows. Previous lows for Union Bank was somewhere around 81, 82 levels. Currently, it is at 85, 86. So at this price also, Union Bank is a short candidate with a stop loss at 88, 89 on the high side, and we can again expect 81, 82 on the downside. The other stock which we like on the buying side is BPCL, Bharat Petro, and it's an interesting formation. The stock was facing a lot of hurdle close to 420 levels, but yesterday the stock has managed to close above this level. So the next level to watch out for is between 435, 440. So it's a decent 5% kind of upside from current levels. And again, ahead of OPEC meeting, we are expecting some more activity in all oil and gas related stocks. So it's a buy at this price with a stop loss at 415 BPCL, and we can expect 440, 435 on the higher side.
Okay, hold on both of you, but onto a special segment, Bloomberg Edge, where Jayesh Kilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what's on the radar?
Morning, Darshan. There's two stocks today that the Bloomberg terminal has thrown up, and coincidentally, they're from the same sector, but one is on the long side and one on the short side. Can also be called as a pair strategy from the same sector. The first one was ICICI Bank, which is a buy indicator has been put in place by the trender, and PNB sell call given by the trender indicator. We'll go through both the charts one by one, but before that, let's have a look at how the trender works and what are the conditions that you have to keep in mind. It's a proprietary Bloomberg indicator which uses average true range as a concept for calculation. It also helps you to generate buy and sell signals, but also tells you where to place the stop loss. So that is very important. How do you generate the buy and sell signal? Simply follow the color. Green color gives you a buy signal and red color gives you a sell signal. With that theory in place, let's have a look at the chart of ICICI Bank. That's the last 3-month chart of ICICI Bank, and you can see that there was a strong resistance which was thrown up by the trender ever since the month of May, and as of yesterday's close, this flat red line has been crossed, which means that there is a buy signal in place for this one as well. And this is significant because this has happened after a consolidation of nearly a month of prices. You can see that 280 to 290.95 was the range that the stock was trading in. Yesterday's close indicates that it has in fact broken out and crossed above this red line, which gives it a buy signal. The other chart, interesting one, is on PNB. If we can go to that chart, it shows exactly the opposite thing, wherein the price has in fact closed below the support line which was indicated by the trender. You can see that the stock has been on a steady decline. It consolidated in the month of May and better part of June as well. With yesterday's close, this big candle that you see, it has in fact closed below the green line, which gives it a sell signal.
Okay, so the Jayesh, if you backtest this, do you have any data on that?
Yes, Darshan. So backtesting I did on ICICI Bank. In the last 1 year, there were 3 trades. All of them were positive, and the net profit would have been about nearly 7% for each trade. On PNB also, I did the backtesting, but it shows skewed results because of the big up move that we saw during the recapitalization. So I have left that out.
Okay, so that's the view that's coming in, and that's what the Bloomberg terminal is throwing up. It's throwing a buy signal on ICICI Bank and a sell signal on PNB Bank. Samit, anything that you see on these two counters, PNB as well as ICICI Bank?
See, as far as PNB is concerned, clearly this has been one of the underperforming sector, the PSU Bank overall, and this is the stock which has been facing hurdles around 90-92, and in last 4-5 days again it has started correcting. The stock has managed to close below its important support level, which was around 85-86. So we would see continuation of this corrective move. In the near term, the levels to watch out for would be around 75-76, and on the higher side, 90 remains to be a very strong resistance. At the same time, ICICI Bank clearly, after a long consolidation, the stock is showing some kind of strength around 280, 285. In the last couple of days, the stock has managed to give a decent move. 300, 302, these are the levels to watch out for. If the stock manages to surpass those levels, then at least in the near term, we could see a good momentum in this counter. And in this case, this stock can head toward 315, 318.
Interesting. I was just looking at the set of stocks which have gone down in yesterday's session. Titan features out there too, 2.5% down at 868. So from near 1,000 levels, the stock has come off quite rapidly. The 1 month range is about 5%, yes, but I think from 1,000 to 868, that's about a 13% correction in a company which guided to some fairly splendid growth for the next 5 years, not just the next 1 year. And that speaks volumes about how select companies which were trading at expensive high valuations too have come off. It's very selective. Britannia hasn't, HUL hasn't, but Titan has, and that stock is certainly under some pressure in the last 3 odd months, actually the last maybe 45 odd days. Avinash, strong company, strong guidance. Does this give people a chance to accumulate? Titan?
Yeah, I think Neeraj, if one were to look at the next say 12 to 18 months, I would believe that consumption will still continue to be a strong theme, and I think Titan enjoys extremely strong financials, a very robust capital structure, a very strong free cash flow generating kind of business. I would believe that despite the fact that the stock has underperformed, it's primarily because the stock had run up also pretty fast post the Q4 numbers. But looking at the kind of management commentary on both the volume as well as the headroom to increase the business over the next say 3 to 4 years, our sense is that a lot of unorganized demand within the jewelry segment would now get channelized into the organized segment, and that is where Titan would benefit. Clearly, in the near term, the stock could possibly remain sideways to a little negative, but if one were to take the next 12 to 18 months, I would believe that yes, there is a case for a good amount of upside, provided one takes a slightly longer term view and sits on these stocks, because these are genuinely investment grade stocks. Clearly, more the time you remain invested, I think you can definitely make a decent amount of money here.
Interesting. They've also started a perfume range. I think it's called Skin, if I'm not wrong. Let's wait and watch if that tends to bring about some luck to Titan. We have the management of Mahindra Holidays coming on later in the show, Avinash. What are your thoughts on this one? Corrected, went through a very strong period of bout of correction. Does it now price in almost all the negatives?
See, I think the most important things is, I think, what's the kind of accretion to the membership base, because that was one issue, the company had mentioned, and clearly one saw a little bit of stagnancy on those numbers. So hopefully if the member addition takes place a little more aggressively, I think that would be a key number to watch out, and the kind of properties they have launched. I think their business is always guided by new set of properties and the member additions. So, probably these two numbers have to be clearly put out and delivered by the company in the coming quarters.
Okay, let's ask a technical analyst on Titan, because that seems to be a talking point. Shrikant, any view on Titan? It's corrected significantly. Is it the time to accumulate now?
Certainly, because if there is a medium to long term view, then certainly it's a buy. I think the stock has already made a bottom close to 850, 855 levels, because from there we saw a very strong rebound to 920, 930 levels, and now again it is correcting back to its same lows. And if we see the overall pattern of good mid-cap companies, the number of companies have started forming double bottom or little lower bottom kind of formations, so which is actually positive for the market and for all these mid-cap companies. Especially for Titan, we have a bullish view, and it is very close to its rising support line area of support. So it's a buy at this price, more on dips. I think it should not break the levels of 850 on a closing basis. So buy with a medium to long term view.
Fairly interesting. Let's wait and watch if that turns around in that fashion or no. 850, Shrikant believes, is a strong support for Titan. The world, though, is a different place today. A lot hinges, of course, on whether there are further salvos from Donald Trump, and then, of course, the big elephant in the room today, and that is the OPEC meet and the outcome thereof. Ahead of that, it's a mixed bag for the world markets. The Nikkei started off and stayed low for most part of the morning. Shanghai up about 0.5%. SGX Nifty indicating a start which could be marginally in the red, but remember, it's been deceptive the last few days, so no saying that this is how the markets would do. The question mark only is, will the correction that we saw in late trade yesterday continue at the Nifty Bank and thereby on the indices as well? Starting off on a flat note, the first minute of the pre-open session. Let's wait and watch if this changes or no. The Nifty Bank, if we can, should also come up on your screen and see what's happening thereof. Okay, but let's bring up the index components. ICICI Bank, Reliance Industries, amongst others that I want to highlight. Cipla has an unnatural 7% downtick. I don't think that will happen. It will change. It has changed already. The OMC should correct a bit, maybe pull back a little bit. Yesterday went up, but crude prices have bounced back. I don't know if that materially brings about some change. So again, all over the place for the oil marketing companies. HP down 3%, IOC marginally higher, or flat rather, BPCL marginally higher. Let's wait and watch what happens here. Vedanta about 3% kind of a downtick. Doubt that will happen, and I don't think Reliance will have this 1.5% downtick. I would really doubt it. Really, it's been in a bit of an uptrend. Let's wait and watch if that lasts or no. On the flip side, Asian Paints has this uptick as well. So I think the Nifty rates are all over the place. Might do well to focus on stocks which are in news. Tata Steel, probably just one stock on the index which is in news. Let's just see what that is doing in the session today. No, again, not impacted at all by the news flow. Darshan, what are you spotting?
Yeah, so as far as some of the mid caps are concerned, an unlikely tick of 20% on Take Solutions, which probably might cool off soon. So that's the move that's coming in. It's cooled off already. There is Barmer Lorry, which is up almost 15% in opening trade with very low volumes. So that should probably also correct in trade. That has also corrected significantly now. So Manpasand and Wakarangi are on upper circuits. They've started the up move. Apart from it, Moil is something where a little bit of traction has been seen. Manappuram Finance is where traction has been seen. And again, limping back is the Federal Bank, which had a very poor fourth quarter. So a little bit of traction happening on Federal Bank. On the losing end, Quality continues to drive lower. It's at 27 now. There is India Bulls Housing, which is down, showing a downtick of almost 3% currently. And the oil marketing companies are falling in trade. So that's what's happening. Just wanted to also point out JSW Steel. Because of the entire funding that they're doing in the US markets. How's the market reacting to that? And Tata Motors, let's again pull that up ahead of the crucial JLR meet. So that's what's happening in the market. Avinash, any view on JSW Steel? Aggressively, they're trying to, build up their portfolio and capex in the US markets. Would you take that as a positive?
I think, Darshan, if you look at the kind of commentary, the management posted after the Q4 numbers, they were extremely strong on the demand side. I would believe that, I think we could see stronger set of volume as well as profitability numbers, starting FY19. So I think any dip on this stock should be actually be used to accumulate, because I would believe that within the metal space, this is one company which could possibly show a very strong positive surprise on the earnings side.
Okay. We'll watch out for JSW Steel, but Somit Sarkar now joins us with the big brokerage calls of the day. Somit, which are the companies that you have on the list?
Good morning, Darshan. On the big brokerage calls for the day, first we have is Motilal Oswal on ICICI Prudential. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 480. Now, according to the brokerage, ICICI Pru will maintain its growth leadership on the back of its strong distribution network. Along with that, insurance companies' persistency ratio and new business margins have improved significantly, and its margin gap with the peers has narrowed according to the brokerage. Now, going forward, rising share of protection business and its product mix will further boost the margins for the company. Also, product innovation will drive market share gains and boost profitability for the insurance company, according to the brokerage. Now, the brokerage also says that the valuations are attractive for the company and improving return ratios would further drive re-rating for ICICI Pru. Lastly, Motilal Oswal also has a bull case target price of 560 on ICICI Pru, where it is expecting the company's gross premium and net profit to grow at a compounded annual growth rate of 26% and 15% over FY18 to FY20. Second, we have is Angel Broking on Amber Enterprises. Now, the brokerage has initiated coverage on this stock with a buy rating and a target price of 1,272, which suggests a potential upside of more than 30%. Now, according to the brokerage, Amber is in a sweet spot as the room air conditioner industry is seeing favorable trends. Now, the current room AC penetration in India is as low as 4%, which provides a good growth opportunity for Amber Enterprises going forward. Along with this, the recent acquisitions done by the company are also expected to further boost its profitability. Also, reduced interest cost and limited capex going forward will help the company improve its profit. Now, the brokerage is expecting the company's revenue and net profit to grow at a CAGR of 28% and 51% over FY18 to FY20. Lastly, the brokerage sees that the valuations are now cheap for Amber, and the recent correction in the stock prices provides a good entry point when it comes to Amber Enterprises.
Well, thanks a lot for that. We'll watch out for that, Somit. Do you like any of these back-end manufacturers, Avinash?
I think Amber Enterprises, as the report suggested, I think is a very large vendor to most of the air conditioning companies, and I think the kind of scale at which they operate, I would believe that yes, I think numbers in the next say 12 to 15 months are going to be extremely strong, both on the top line as well as on the bottom line side. Margin expansion is something which would be interesting to watch. So Amber definitely, maybe at the current levels or maybe a little slightly lower level could definitely be an interesting pick.
Okay, that's the view that's coming in. Some of the other companies I wanted to point out. Samit, do you have a view on Strides? It's been rather volatile. A couple of approvals coming in for the company that could work positive for them. But overall, how do you place Strides as far as the markets are concerned?
See, recently we were quite upbeat on the entire pharma space, but we were closely tracking some of the marquee names, Sun Pharma, Dr. Reddy's, Glenmark. We have been recommending this stock, Lupin as well. But Stride Station is the one stock that we have been avoiding. The stock has corrected significantly and it's trading around it multi-year support low, which is around 350, 360. But I would avoid trading in this counter, considering its high beta nature. If I have to place any bet, I would rather wait for a breakout to happen beyond 422. If that happens, then yes, the stock can head toward 450. But as of now, I don't see any trade setup in this counter. Wherein on the lower side, immediate support to watch out for would be around 380, 375.
Okay. 6 minutes done on the pre-open session. No big moves on the indices per se. In fact, none of the Nifty 50 stocks are showing a move which is higher or lower than 1%. So keep that at the back of your mind when you're approaching. It's a very, very flat start that we're seeing. And the Nifty 52 at the almost at the fag end of this pre-open session is showing an absolutely flat move. A stock though which is consistently under pressure is UPL. The last few days I've seen more red ticks than green. Shrikant Chauhan, what does somebody do in UPL? If you had a short position which you had taken a day before yesterday because the stock was down 3.5, would you ride it?
Neeraj, see, like this particular stock has broken its support area, which it was like holding since last almost 6 months. So it's a decisive breakdown, and it closed somewhere around 645 yesterday. The next level to watch out for is between 610 to 600. So from here also we can expect close to 5 to 7% kind of fall. So yes, certainly one can hold on to short positions with a target of 610 on the downside, and one can trail down a stop loss to 670, 675 levels, because if there is any bounce back, then again one can look for initiating some more short positions.
Well, sign looks like it'll start off on a decent note. Let's wait and watch. Delta Corp has recovered some bit of lost ground from where it had lost out the last few days as well. But aside of that, no meaningful moves. The pre-open rates have settled. We'll start off on a very, very flat note. Asian Paints is likely to be the top gainer, which is just about 0.68%. So no moves there. Followed maybe suit by Bharti Airtel. HCL Tech might have a small start in the green. So those are 2 or 3 names that I can spot. And OMCs might start off on a green note yet again. The trade out there in OMCs is the more interesting one, Samit Chavan. Big moves, and then in today's session too, marginally higher despite crude moving up. If you were long, would you take money off the table?
See, as far as OMCs are concerned, we have been witnessing some kind of consolidation within a wide range. As far as BPCL is concerned, we have been closely tracking this counter, and recently the stock has managed to recover fair bit of ground from its recent lows, somewhere around 350, 355, trading around its higher band, which is at 425, 427. So I would be closely tracking this particular level, how it behaves around those levels. But if it manages to surpass 428 on a sustainable basis, we could see this move getting extended probably towards 445, 448 also. So I would rather trail my stop loss. I would trail my stop losses higher around 405.
Okay. Well, minutes away from the market open, let's tell you all that you need to know to stay ahead in trade today. Gautam Adani and his family members have sold a little less than 3% in Adani Ports. The Euro-Pacific Growth Fund has stepped in to pick up some of the stake.
ThyssenKrupp Work Council has voiced their reservations on the proposed JV with Tata Steel, suggesting that the group does not work in haste. Tata Steel is up 0.5%.
Cheers are in order for Som Distilleries. Its subsidiary Woodpecker Distilleries has secured the nod to start producing Indian-made foreign liquor.
Moving on to brokerage calls, Motilal Oswal initiated coverage on ICICI Prudential with a target price of 480, while Angel Broking initiates coverage on Amber Enterprises with a target price of 1272.
ICICI Bank's fallen out of favor with Goldman Sachs, with the bank being removed from its conviction list.
And CLSA's Chris Wood believes that the S&P 500 has peaked for the cycle, adding that trade concerns are occupying investors' attention.
Well, that's essentially all that you need to know to stay ahead in the session today. ICICI Prudential, Avinash, there's somebody that we spoke to yesterday mentioned how expensive the insurance plays are looking. What is your sense? Are they completely out of whack with real valuations, or would you believe there is merit in buying some of them for a long-term perspective?
No, I think Neeraj, insurance companies in the near term could look a bit expensive, but I think clearly, they also fall in the consumption theme, and I would believe that over the next, say, 2 years, the kind of financial literacy and the kind of market penetration, which is wide open for these insurance companies is a huge market. So I think looking at it from a year's perspective may not be the right approach. But over the next, say, 2 to 3 years, one could definitely make a lot of money in these insurance companies, typically something like a SDFC Standard or maybe ICICI Pru or even a SBI Life. I think these are all strong businesses with very strong, business models, a very strong capital structure. So I think one needs to really take a longer term view when one accumulates these stocks. Maybe in the next 6 to 12 months, these stocks may not look all that great, but over the next 2 to 3 years, from a portfolio point of view, definitely money can be made.
Okay, one stock that I want to bring to focus is Jet Airways. Two triggers. First of all, ahead of the all-important Vienna meet, how will crude pan out in trade? It's been rather volatile crude. And secondly, Jet comes out of the F&O ban. So we'll ask a technical analyst. Shrikant, do you have a view on Jet Airways?
Jet is falling consistently from the highs of 850, 800, and currently it is holding around this level since last almost 1 month. While looking at the overall scenario for crude prices and the way there is a news flow on the market share and all, I think max the stock can fall to the levels of 340, 330, where it has a support of its previous lowest low level. So it's a decent buy at this price, more on dips, because I'm finally expecting this stock to rebound sharply in next 1 or 2 months of time. Dead cat bounce is also not rolled out, so it's a buy, but buy on dips, buy at these levels, more on support areas close to 340, 345.
Okay, interesting. Just before we get in the top trading ideas from our experts, I'm just looking at the Nifty 50, Nifty 500 names and looking at the movers and shakers, and if there are any meaningful ones. There's some strength in Vakrangi, some strength in Manpasand after their announcement of a board meet to declare results. So let's wait and watch if those two continue to rise. And AstraZeneca, Darshan, has some uptick today, 2.5%.
Yeah, so they launched a drug in India. They got the approval from the Indian authorities. It's not available here. But somehow that's a decent drug, and probably that's what's causing the traction that's happening in AstraZeneca. I still have to get in more details of how big this drug is, but my initial talk with some of the analysts did believe that it is meaningful for AstraZeneca.
Yeah, and it's starting to do well as well. Avinash, any quick thoughts here? AstraZeneca, 10-15 seconds, anything?
I think I think clearly my sense is I think the stock has already taken note of this new drug, and I think we have seen a strong bounce in the stock in the last 2 to 3 trading sessions. So I think one would need to have a little bit of clarity on the earnings impact and the kind of market opportunity for this drug. But overall, I think it definitely seems to be on a stronger momentum, considering that most MNC pharma players have been doing pretty well.
Okay, very quickly, 50 seconds for the market to go. Samit, very quickly, what's your top pick for opening trade?
I'll go with LIC Housing. After a long consolidation, the stock is showing some kind of strength. So one can go long with a stop loss of 486. Target would be 546.
LIC Housing Finance. And Shrikant, what's the one that you are selecting today?
I would like to go with BPCL, Bharat Petro, which is around 421, 422 levels. It is very close to its upper range of breakout, and overall formation is suggesting us that it is heading for 440. Decent upside. Stop loss is also nearby, 415.
Stay on, gentlemen. We'll just take in opening thoughts post-market open and then let you go. But here's how the markets are starting off this Friday morning. Flat as flat can be. Well, the Nifty's barely moved an inch, the Sensex too, and the Nifty Bank too. I mean, there's just no movement out here in any of the key indices. I doubt that the mid caps and the small caps would be doing something dramatically different. Yeah, unchanged as unchanged can be. It's almost no difference between market being open and not open. So hardly any moves there. Let's bring up the heat map and try and see. It should be even Stevens. Yeah. Pretty much even Stevens. Adani Port, because of the promoters selling off a reasonably large stake, is probably under pressure today. UPL continues to grind lower, but no newsmakers really. HCL Tech has won that deal with Nokia. You never know. I mean, never get to know the size of a deal like this, but it's a 5-year deal, so maybe that's why HCL Tech is doing reasonably okay. But the only pocket that I think seems to be doing reasonably okay are the OMCs. They are continuing from where they left off, but those two, the gains are marginal. IOC and BPCL, to be honest, I can't even see HPCL amongst the list of the gainers. So HPCL is actually losing out in the session today. So it's chalk and cheese for the oil marketing companies too in the session today. Hardly any movement that we're seeing. Titan, if you can just pull up 2 or 3 names out here. One is Titan, one is Tata Steel, and one is Tata Motors. 3 names. So Titan company, well, the slow grind continues down another, well, actually not down, it's very, very flat right now, 3 points odd. Tata Motors ahead of the JLR meet. Let's just see what that is doing. Again, a very, very flat start. And Tata Steel, well, that's a stock in news, all right, but not reacting adversely at all. Maybe the market has digested some of the news flow already with regards to ThyssenKrupp, but that stock about 558 rupees, again, unchanged. Darshan, what about the broader markets?
Nothing, Neeraj, mainly on the mid-cap end also. The highest that's moved is, this is referring to the NSE 500, Nifty 500. Vakrangi is up 5%, Manfasand is up 5%, Videocon is on upper circuit. AstraZeneca Pharma has really surged. It's up almost 5% now. So the news clearly making way for what the approval that came in. HSIL is up almost 3% in trade. And First Source Solution again trying to inch back to the 52-week high. It's up 2%. Jet Airways out of the ban is doing well. Strides because of the WHO approval is doing well in trade. After dropping significantly yesterday, M&M has managed to rebound in today's trade. It's up in trade. And on the losing end, you have counters like Quality, which is down in trade. Avanti Feed has fallen again. After the big recovery that came in, Avanti Feeds is down another 3% in trade. Granules also can't hold on to the gains that it had last week. It's falling in trade. KC International, despite all the positive commentary that the management gave at the RPG Group analyst meet, isn't doing well. And as Neeraj pointed out, UPL continues to slide. HCC sliding close to the single-digit number. Rain Industries again trading rather weak. PC Jewelers trading weak. So overall, it's a day where mid-caps again are taking it on the chin today.
It's looking slightly soft for benchmarks as well as the broader end of the spectrum. Quality, remember, continues to slide lower. Opening thoughts from our experts before we let them go. By the way, UPL is down about 1.7%. Keep that at the back of your mind, 635. But opening thoughts, Samit Chavan, before we let you go.
Market has been consolidating and it continues to consolidate. If I have to see any particular level, as I've said in my opening remarks also, 10,700, 10,680, this is the support zone to watch out for on a closing basis. So as long as it remains above that, one should trade with a positive bias.
Okay. What about you, Shrikant? Anything that pops up for you in terms of a thought or a trade? Index, non-index?
I think, see, Neeraj, the overall market is like completely range bound, and the way it opened today, it was hardly any expectation that the market will open like this. But because of there is a recovery in all Asian markets, again we are seeing range bound activity, and again ahead of OPEC meeting we are not expecting market to fall drastically. So our strategy should be to look for adding long position even at this price, more on dips. With a final stop loss at 690 or 680 as Samit said, and again we can expect rebound in the market because still the market is not going to break this level, I mean to say 700 decisively. Unwinding is not going to come, and that will keep the market range bound. So again on the high side, 770, 780 is not ruled out. Bank Nifty is also very I'm to say close to its important support areas, and there also we are not expecting any major sell-off because all PSU banks are very close to their important support areas. So even State Bank is also having very good support between 265, 266. So probably if we take a contra call of going long, I think that should yield to short-term traders.
Okay, Avinash, just a final thought on the IT space. All the fizz that was there on TCS and Infosys ahead of the AGM, as well as their AGMs respectively, has actually cooled off. No major moves coming in. Would you be a buyer in either TCS or Infosys at this level?
I think Darshan, Infosys definitely looks much more interesting, and in terms of valuation, trades at a significant discount to TCS. So I think Infosys, from a longer term perspective, things have started getting better. The rupee is getting more weaker. Our sense is that the rupee headwind as well as the US market headwind should actually turn out to be positive over the medium to long term. So I think Infosys definitely looks a better choice as compared to TCS. But yes, from a longer term perspective.
Okay.
Okay, gentlemen, all of you, thank you so much for joining in today. Avinash Gorakhshekar, Shrikant Chauhan, as well as Samit Chavan. Thank you so much for joining in today and giving us your thoughts. We spoke to one more market guest, Sridhar Shivram of Enam Holdings, who spoke about navigating through the uncertainty over the next few months by investing without expecting any meaningful returns. Surprised? Hear out more.
If I look at emerging markets year to date, already emerging markets are down, say, 5-6%. And if I remove China from that, emerging markets are down 9% for the year. And I go back to the fragile five because they're raising their head again. Barring India, if you look at the performance of, say, Indonesia, Brazil, South Africa, Turkey, all of their currencies are down at least 8 to 10%, in some cases even more. These markets are all down anywhere on MSCI dollar terms, anywhere between 10 to 30%, barring India. So I would say that the currency fears in emerging markets are again raising their head. And so there are multiple reasons for this, because what's happening in the US, interest rates are going up, some of the QE is being reduced. Some of these countries have their own issues. I would say that within that fragile five, only India is standing out right now. So you go back to 2013 and see India had a current account deficit of almost 5%. You compare that to, say, 1.5%. Our currency chest is also fairly reasonably good at 400 odd billion. So India's currency is also down 4-5%, but much lesser than most of the others. So I would say that if I look at what is happening to the asset class, which is the emerging markets itself, they're going through some sort of a turmoil. I would say within that, India is doing reasonably well, but I would say 18 is a year to protect capital, build your portfolio for 19 and beyond, and we have all the building blocks for that. Which is, if I look at, the micro data, some of the macros may not be favoring right now, but micro data, which is what is happening to, consumption, what is happening to, say, credit growth at the retail level, corporate still not borrowing. Look at CV data, two-wheeler data, cement, steel. All of them are showing green shoots. We've seen green shoots in the past, but it seems like this is here to stay, because having interacted with many companies after the result season now, I haven't found one company giving me even a cautious outlook. Most were bullish that this time things are looking much better. And this is happening after we've had 3 years of lull. So I guess things are building up on the ground. So I remain reasonably constructive on the market, with the caveat that 18 might be a tough year. Time to build your portfolio, and wherever you think quality is questionable, that one should exit.
It's interesting. You're talking about the building blocks being there in place. We've laid out the backdrop of what the returns or the investment climate is likely to be. You believe navigating through these uncertainties is a process of picking the right businesses, not necessarily for returns immediately, and ideally pick businesses which are likely to show growth, irrespective of whether the returns come in the next 6 months or the next 18 or 24 odd months.
Exactly. I don't think a lot of the returns will be front-ended. They will be back-ended. So if you're buying something today, you're buying for 18 to 24 months, I hope. I mean, that's the thesis that we normally follow. And if that be the thesis, then this is the time to, build your portfolio right now. And even to some extent, rotate portfolios. I'm sure everybody has mistakes in their portfolio. It's just time to just, correct some of those mistakes and look for, the themes that will work over the next 18 to 24 months.
It's very interesting. Somebody else, Kenneth, I think, was telling me as well that the next 8 months, 12 months would probably give you the chance to correct some of the mistakes, take a hard look at your portfolio and correct these mistakes, etc. The problem, Sridhar, for at least an average investor who not necessarily has access to companies and try and assess their body language or tone, etc., except for watching them on business feeds, is that optically, whatever is showing promise is looking terribly expensive. Whatever it is not looking expensive is either SME or maybe small mid caps or losers. I mean, what do you do in a scenario like this? Because it takes guts to go out and buy something that is trading at 20, 30, 40 PE, or in the case of staples, maybe 50, 55 times.
Yeah, so one, for small investors, I would advise that they better use a mutual fund.
Sure.
And this has been my constant advice, that you always hear people giving you tip to buy.
Yeah.
You never hear people giving you tip to sell. So then you're always, holding the baby once, even after the story is over.
Yeah.
So I think that's a easy and safe bet for small investors. But in general, I would say that many of the small and mid caps have corrected. So let's accept that the correction is not what we see in the larger index.
Yeah, true.
It's easily 25-30%. So now we are finding many of the mid caps also at interesting levels, and even for the large cap, the index hit 10,000 in July last year. We are at 10,700. We're almost a year. So it isn't as if even the large caps have done anything for a year. And even within that, if you see, you'll find many of them which haven't done anything at all for the last 1 year. So I think there are enough opportunities which are opening up right now because of what has happened to the small and mid cap, section of the market. And large cap, to a large extent, is sort of consolidating. So it gives you an opportunity to look at some of these, see if there are any mispricing which is happening in the market, and try and build a portfolio based on certain thesis. It will not always go right, but at least it's giving you an interesting opportunity right now because of the correction that we've seen in the market, both time and price.
Yeah, somehow I really want to do away with this notion of large cap is safe and mid cap isn't, because that's really not true.
Yeah.
But so where is it that you believe the thesis is right currently?
No, so I think there have been periods where it has been, you just buy a theme and you just play it. I remember, end of 2013 was something like that, because inflation was coming down and you could see that structurally the story for India was going to play despite whatever happens to the elections. This is more looking like a really bottom up. You have to look at each stock and figure out whether it is good, bad, ugly. I can't really put my hand and say thematically something is looking great, possibly corporate banks as a basket, but otherwise in general it is more stock specific, and we are finding enough stock specific ideas both in the mid cap and in the large cap.
Are you telling you're sector agnostic?
Correct.
You
sector
are?
Agnostics, yeah. So if the stock is looking good, we are looking at that, and it is coming from all sectors, right from commodity to consumer to durables. A lot of opportunities. In fact, there are consumer companies which are trading at one-time sales. So very rarely would you have got companies not in the staples, but in the durables and other spaces. So there are opportunities which are opening up in the market because of various reasons.
So you had various investment styles, I'm sure. Is your current investment style bottom up? Yes, but bottom up with valuation has been the starting point?
Never. Actually, valuation has never been a starting point for me. So the bias, because of the history of investment style that I've had with my earlier employer, there has always been growth. So if I see growth, and growth I mean profit growth, it need not always be top line growth. Many times you could have operating leverage which is kicking in for various reasons, and you could have profit growth. So as long as I'm seeing between 15 and 20% profit growth and sustainable for at least for a few years, then I'm agnostic to the valuation. Yes, I will look at whether it is within the historic band. Is it within the say I can give you an example that sometime in 2009 we had invested in staples as a basket because the premium to the market was the least, and this is post Lehman. Markets were flying. This sometime end of 2009, and most stocks in India were the cyclical stocks which were flying, and we had taken a contrarian bet that staples was something which was trading at a substantial discount to its premium that it normally generates from the market. So that the premium was at the lowest at that point of time. So we had bought a whole lot of consumer staples at that time, and it worked out brilliantly for 5 years after that. So it's not necessarily just the absolute number. It is also relative to many of its, how it is traded in history or what is the premium it is to the market. So based on that, you take some sort of calculated sort of an estimate and then buy. So that's what I'm saying. I'm at this stage, agnostic to sectors, but a lot of stocks are looking very interesting.
Before, of course, remember the show will play out at about 10:30 a.m. today on Bloomberg Quint. Before we end this leg of Indian Open, a Bloomberg Quint exclusive, Alok Industries lenders have approved JM Financial, ARC and RIL's joint bid for the company. Vishwanath Iyer joins in with phone line with the details. Vishy.
Right, Neeraj. So the lenders have voted yesterday and they said that about 66%, they were voting with the idea that they need at least 66% of the votes to clear the bid. And in comparison, about 72% of the lenders have voted in favor of the RIL JM Financial bid. Remember, this is the second round of bidding that the lenders did after the NCLT directed them to do so. In the previous round, only the limit or the requirement was 75% votes of the lenders for a plan to go through, and because it didn't reach that level, the case had been thrown into liquidation. Then the NCLT was hearing the liquidation plea by the resolution professional, but was also hearing pleas by the Employees Association, which suggested that liquidation should not go through. And they said that since the law has been amended after this voting happened, so maybe you could consider a new round of voting and consider it within the parameters of the new regulation. And because of that, now the lenders have approved the plan with the requisite majority. The case will now be heard again on the 26th of June, which is when the NCLT will look at what happened at the COC meeting. And once that happens, then the case can just go past that level and the resolution plan can continue. According to what our sources are telling us, RIL and JM Financial have bid about 4,000 crore worth of repayment, and their overall bid is worth about 5,000 crore. This is against financial creditor claims of about 29,000 crore.
Okay, Vishy, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Need to take a very quick break. On the other side of the break, we get into the corporate discussions. Mahindra Life Spaces, well, after the falls that we've seen, the brokerages are turning bullish. Kavinder Singh joins in to tell us about whether the leg up can come in the near future. And a bit later on, Vivek Saragi of Balrampur Chini would join in to talk about what's the way ahead post the bailout.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
One more opportunity to invest in ICICI Prudential Mutual Funds Bharat 22 ETF and own jewels of corporate India. From 6 core sectors at a discount of 2.5%. The scheme seeks to give you growth, stability and create long-term wealth. Non-demat account holders can now invest in the new fund offer of ICICI Prudential Bharat 22 FOF. Hurry, invest in the scheme of your choice. Further fund offer and NFO closed 22nd June 2018. To invest, visit ICICIPruMF.com. Tarakki kare. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Welcome back. You are with us on Indian Open. Let's focus on corporates. Mahindra Holidays has decided to tweak its strategy. The membership-based resort chain is now focusing on digital and referral systems to build on its base. They are focused on adding the right kind of members. So what's prompted them to change course, and is it yielding results? Will it yield results if not already? Kavinder Singh, the managing director and CEO of the company, joins us right now to talk about this in greater detail. Mr. Singh, good morning and thank you so much for joining in. This is Neeraj here. What's happening over the last 6 to 12 odd months, and how is this small change of course or alteration of course, if I can use that term, going to benefit Mahindra Holidays over the course of the next 1 to 5 years?
So one of the reasons we have taken a decision to get members who are able to pay higher down payment, as you know that we sell our memberships on EMIs, we have found that people who are able to pay higher down payment are predisposed for also enjoying the lifestyle that we promote in terms of spending family holidays at our resorts and also spending their time on activities at the resorts as well as the various food and beverage offerings that we promote in our resorts. So we believe if we have to maximize the member lifetime value with us and they have to really enjoy, they must be in a position to look at this product as an essential product and therefore commit upfront higher amounts, which will help us to also know that the commitment is for real. And as you can see, that our cash balance, which used to be just 2-3 years ago at about 15 crores, now we are at 470 crores. In fact, in last 1 year, we grew by about 200 crores our cash balance. So we believe the strategy is working. We believe this is helping us get members who will enjoy our proposition. And as you know, our proposition itself is moving towards creating an experiential ecosystem, which is about not only holidaying at 7 nights, 8 days at any of our resorts in Mahindra Holidays, but also the experiences that we are creating, city-based experiences, curated vacations, cruises, etc. So we are making our brand aspirational, and this is in line with that.
So, well, if I just look at what's happened since you changed course, I think Q2 and Q3, there was a correction in membership additions which revived, or at least has shown revival in Q4. So we know those numbers. While I wouldn't want you to talk specifics because your results would be coming out, but can you just give me a glimpse into how the April, May, June quarter has been in terms of membership additions?
So we normally do not give forward guidance, and all I can say is that our strategy is on course. And we are obviously seeing significant amount of momentum in terms of our resort occupancies. As you know that even resort revenues over the last few years have been growing at a fairly high rates. And we are seeing the momentum in terms of occupancies as well as the resort revenues. As far as member additions are concerned, the strategy of looking at members who would be able to look at higher down payment, lower EMI tenures, and also who will be able to enjoy our proposition is being pursued.
Interesting. So do you believe that this, when you mentioned that the strategy is yielding results, do you believe that this net cash balance that you're talking about, I think 210 crores, if I'm not wrong, as you mentioned, in the last year gone by, this will only inch up, or will you at some point of time start utilizing this in order to expand? Because I see that you have plan to add about, what, 400, 500 rooms over the next couple of years?
Yeah, our strategy to increase our room additions is on track. If you know, in last year, we opened our 50th resort at Naldera, which was about an investment of about 100 crores. And now we have 500 crores capital expenditure plan on the way. We do expect at least 2 resorts to become functional in this year, adding easily about 250 odd rooms. And what we are realizing is that the capital expenditures plan notwithstanding, and capital expenditure has been incurred in the last year as well, and yet we were able to improve our cash balance situation, largely also because of the fact that we are focusing on our receivables collection and making members holiday. And that cumulative effect is what you're seeing, and we believe that is sustainable.
Mr. Singh, you know, for the longest time, a lot of grey-haired investors who invested in your company had multiple ways of approaching this asset, right? I mean, different investors approach investments differently. A lot of people were of the opinion that here you have a player which is debt-free, has own properties which are at such high in number, and at some point of time, all of those operating leverages will come into play, and, you know, it's a multi-bagger in the making. Things haven't panned out in exactly the same fashion due to a variety of reasons. Do you believe over the next 5 years, or do you believe that the next 5 years can look materially different from what your previous 5 years have been like?
Okay, if you look at in the last 3 years, you know, whether you look at member additions in terms of growth, whether you look at the resort revenues, whether you look at our cost structures, there has been a significant improvement in all of these metrics. And we believe that we understand what it takes to build this business for the future. We do not comment on what stock market thinks about us, but we are very, very clear that our business model is robust. And you know, in hospitality, typically there are 2 problems. People have high debt and low occupancies or swinging occupancies. We have very stable occupancies. Last year we closed at about 85%. And as you yourself mentioned, that we have 0 debt. So we are fully capitalized to grow our business. We continue to look at acquisitions both in India and internationally to grow our business. And I must say that while, you know, Finland is a very separate business, but we are realizing that the fact that we have 33 more resorts, 25 in Finland and 6 in Gran Canaria, Spain, and 2 in Sweden, also helps our member to holiday internationally through us directly. And of course, with RCI, we have access for our members for about 4,000 odd resorts. So really speaking, our international footprint is growing, our domestic footprint is growing. So as long as we are able to add resorts with different experiences, I don't see any reason why we can't keep on adding members, because our proposition, we are very, very clear, is truly differentiated, because not only we are offering amazing stay options in various terrains, whether it is beaches, whether it is backwaters, whether it is mountains, but it is also about the holiday activities, the experiences that we provide, including, we recently have launched a new product called Happy Hub in our resorts. We are ensuring that when children and family come together, they have good times, and that's what this Happy Hub signifies. It is more about engagement. We have a philosophy that when people come on holiday, they want to do things, they want to learn things, new things, you know, whether it's pottery making, whether it is, you know, any other skill. And they also want to connect with each other. So the whole idea of Do Learn Connect is being played out in Happy Hub, and we believe that that's what makes us very, very differentiated. And that is the proposition that we are moving forward, and we believe we are on a sound footing.
Your acquisition of members has also changed a bit, in the sense, if I just look at the last 6 years, your acquisition of members through digital and through referrals has moved up, if I'm not wrong, compared to what the proportion used to be, say, back in FY12 or maybe FY11. Can you take us through that? And if that is indeed the trend, does it lead to significant accretion on the EBITDA front over the course of the next 5 years?
So I must say that our focus on digital and referral now is 3-4 year old. We have approximately 48 to 50% of our sales coming through referral and digital. This is fairly stabilized. We have a huge Happy Family referral program which we promote amongst our members, and that is a grand success. We find a lot of members referring their families and friends to become members. As far as digital channel is concerned, the focus is to ensure that we do digital marketing and run digital campaigns to make people know that we are the #1 provider of family holidays. And what it does for us is it gets us the leads, and then our people can reach out to these people who have shown interest, and the conversion happens on the ground. So the whole idea of using digital and referral channel is to create a pull for the brand. These are pull channels. We believe that when we do these actions, it will help us to create pull for our brand Club Mahindra, and that is something that we are committed to. And this is not possible if the brand does not have the the aspirational appeal, it does not have the pull. So we are geared to drive this part of it. Coming back to the EBITDA question that you mentioned, I think if you may have noticed, our cost of acquisition are well in control, largely because of these actions. In fact, there have been marginal improvements that you may have already seen. And we believe that some of these channels actually take time to play out. For example, if you look at digital, in digital there is a lot of investment that needs to be done to constantly ensure that you are on your salient and people are looking at you. And the costs of the digital medium, while for the consumers are falling in terms of the bandwidth and the Wi-Fi and those kind of costs, but as far as the advertisers, or if I may say marketers, are concerned, for them the costs have not really been falling. What we need to do is to become very efficient in our digital spends. That's the act which is going on. We have a full-fledged chief digital officer who is busy with doing that. So we are investing significant in digital. By the way, we had launched our mobile app for our members, and that's also a lead generation source for us. So we are trying to strengthen that piece also. We are using the augmented reality, virtual reality headsets for our prospects to experience our properties. So digital is not just lead gen, it's all about using technology to create communicate the right proposition, and also help the customer experience our product once they join in. For your information, 85% of our bookings now happen online. So members actually are able to transact, pay everything online. So these are the things that will help us to move ahead in a holistic manner.
But does it lead to what, 150, 200 basis points EBITDA margin expansion over the next 2-3 years? Is that a reasonable estimate?
I wouldn't want to say that, because EBITDA margin is a combination of not just the cost of acquisition. It's a combination of our resort costs, it's a combination of our overheads, and it's also a combination of what capabilities that we are bringing for the future. For example, even if the EBITDA margins are improving at a pure same to say, if you were to compare it like to like, but you may realize that we may be investing in a new product, we may be hiring a new skill, and therefore you realize that the EBITDA margins have not improved. So I think we need to, internally we are very comfortable with what we are doing. Of course, we strive to do more, and I wouldn't want to say that these are the routes to improve EBITDA margins. There are multiple levers to improve EBITDA margins, and we are pressing all of them.
Okay. Mr. Singh, I understand you're under constraint for speaking about numbers. Maybe we'll talk about those numbers once your quarterly numbers come out as well. But heartening to know the confidence that you have over the course of the next couple of years. All the best with the member additions. And I hope that those numbers only improve with the quarters to come.
Thank you.
Well, that's Kavinder Singh. Fairly confident management of Mahindra Holidays about the new strategy and what it does. Q4 saw a bit of a turnaround in member additions, and let's see if Q1 does manage to show that or no. Well, if that is working well, whether or not the government sweetening the deal for the sugar sector is working on remains a question. It's throwing in higher subsidies and a dole out for farmers and mill owners as well. We've consequently seen sugar prices move up as well. But the question is, 1 month or maybe 15-20 days post all of this, is this yielding the results? What do sugar manufacturers have to say about this? Joining us now to talk about that and more is Vivek Saraugi. He's the Managing Director of Balrampur Chini, and Yash Upadhyay from our research team also joins in for this conversation. Yash.
So let me first start off with the bailout package. It's been a fair bit of time since the government announced it in the first week of June. What do you make of it? Are you happy, or do you believe that there's more that needs to be done?
They fixed the minimum price of 29. Our UP government, including the UP secretary and the minister, has written to their counterpart in the center government, saying that for UP to clear cane price, the minimum price should be 34. So A, this is not a correct recognition of cost. B, they've said about buffer, well, while the step is appreciated, let's understand the cash flow for that will flow over 4 quarters. And that's not a huge amount of cash, but yes, well appreciated, benefit to be received over 4 quarters. Then we have that ethanol announcement. The interest subsidy, which is 50% of the interest being paid out for the project, that is to be reimbursed by the central government. So again, before any sugar is diverted into ethanol or from B-heavy, the time is again 2 to 3 years, because that's the time it takes to set up a new distillery. So while these measures are good in the long term, there is nothing which is on the table to clear this 22,000 crores cane area, especially in UP. There is 30,000, and our pitch to the UP government has been that you, as the UP government, need to understand that the FRP is where the central is stepping in. UP government's price is 30 rupees above the FRP. So there needs to be a subsidy by the UP government for the UP millers to clear the dues. So this is how we respond to it. Plus there is a release mechanism put in. We think that with the minimum price being put in, the double control of release mechanism is not required.
Right. And sir, but globally too, the situation hasn't been that encouraging. But the government, they have mandated a minimum quota of 2 million tons of exports. How are we doing on that front?
This MIQ of 2 million is a welcome step. However, the next year, we'll need a much larger quantity, because the reports of next year's plantation is much higher. These are the initial estimates I heard about. Having said that, the progress is slow. There are certain anomalies at the end of the center which the association has represented. I think that should get ironed out, and that 2 million should begin. I think about 3, 4, 5 million, 5 lakhs would have been done. But I'm hopeful most of this target will be achieved.
So the government has been pushing for an increase in the production of ethanol. They've taken various measures, such as increasing the ethanol prices from 39 rupees per litre to 41 rupees approximately. Have we directed more cane towards the making of ethanol, and what are the kind of volumes that we're doing on this side?
Let me clarify. At present, ethanol is being made out of molasses. This is the byproduct and leads to zero diversion of sugar into ethanol. For that to happen, there's something called a B-heavy molasses, which is rich in sugar, which needs to be used. Rich in sugar means you lose sugar production to get some extra ethanol production. For that, a separate price is needed. I am hopeful that the government should come out with a policy specifically for B-heavy molasses next season. And this 40.85 was a price which was fixed in the beginning of the year. This is not in recognition of that. So a totally new price for ethanol itself and a higher price for B-heavy molasses ethanol, both needs to come in for the next year. We are yet to hear on that, but we are hopeful that Central is looking at that.
Right. And sir, after a brief surge in sugar prices, they have started to decline again. So how much further do you see sugar prices falling from here on, and where do you see them stabilizing realistically?
That's $1 million question. All I can say is there is a lot of sugar in the system. The permanent addressor is not this release kind of thing. Yes, this minimum price is a welcome step. That is the only way to ensure that prices don't fall. The minimum price needs to be repaid at realistic levels. And the permanent cure is to export the sugar.
So then what is it, according to you, that needs to be done in order to arrest this fall in sugar prices and support the industry?
So as I was trying to tell you, it's a very, very difficult call. If there is a release system, if there's not a release system, if the government is able to announce next year's exports in August, September, that can have a positive impact. If government does nothing, there's a negative impact. So for me to be able to predict next 6 months prices will depend on the measures by the government. Center has stepped in halfway. They need to move halfway more. State needs to go the full way. State has done nothing as of now. From the state government, we are looking for that subsidy, which is the price beyond FRP. Calculated exactly, it comes closer to 40 rupees a quintal, 30 being the difference, there are some taxes and transport. So we have requested the state to pitch in with that, because let's understand, just to pay FRP, if UP's cane price was 290, I would be going to the center asking for what I've just told you. Now UP's price is above 290, is 320, plus there is taxes and transport. So effectively UP is 40 or 35 to 40 rupees higher than FRP. So beyond FRP is what the state government needs to pitch in. FRP, payment of the FRP is what I've told you for the center to do. Maybe increase the minimum price a little higher, deal with ethanol prices more efficiently, have a very large export sort of mandate in the next year.
And finally, sir, a word on your distilleries and cogeneration business. That reported a good growth in the fourth quarter. What is the outlook there for FY19?
Yeah, you see, at Balrampur, what our planning has been is that we will hardly be selling molasses. If you know, in UP, molasses is selling at 1 rupee a quintal, which is nothing, zero, it's like free. By converting into ethanol, and we are debottlenecking our ethanol capacity to be able to supply much higher quantities next year. Our power supplies will also increase, will increase in raw material, that's bagasse. So we personally for ourselves see a good sort of realization stroke profitability in these two divisions. That is for ourselves at Balrampur.
Okay, thank you so much, Mr. Saraogi, for taking the time out and speaking with us and giving us an update on the sugar industry. Back to you, Neeraj.
Thanks, Yash. Well, the markets, just before we wrap up, Reliance Industries is under pressure. And that plus banks doing what they are doing is leading the markets under pressure to 1.5% down for RIL. And Nifty Bank is down. Well, I'm just trying to figure out what could have led this. So, yes, some of the private banks like IndusInd Bank, Yes Bank, are down. SBI too has about almost a % correction. Axis Bank about 0.5% as well. HDFC Bank about 1/3%. So private banks and SBI have certainly corrected, and that's leading the Nifty Bank lower as well. So two key heavyweights banks, Reliance Industries down in the session today. No surprise that there is pressure on the bourses. On the large cap front, on the gaining side, it's Mahindra & Mahindra, which is bouncing back a little, and HCL Tech, which is up in the session as well after the deal that it has won. So a couple of stocks holding out, but the broader markets are absolutely flat. Some of the aviation stocks like Jet Airways are recovering some bit of lost ground. It's a wrap on this leg of Indian Open. Thanks so much for watching. Up next is the F&O Show.